Good afternoon, everyone. This is Henry. So, spending a few minutes on today's, topic of discussion came up as how to spot good entries, which I believe is a very wide-ranging topic. We could probably spend a good deal of time on the various ways of doing it, but I'm going to bring you kind of a brief review of 4 ways that I enjoy thinking of this type of a question. As we get into some of these beginning topics, how the market moves. Again, there's a long list of methods you could use to define market action or how price moves. Inside each of those methods, there would be even more ways to spot good entries. One of those ways could be moving averages. Another could be average true range and its relationship to the daily mean. But when you ask me what I'm looking for in good entries, the answer is always going to begin with, what is the symbol? And I use symbol because this applies to stocks, futures, options, currencies, anything with an X and Y axis. We can view its relationship to its Voodoo roadmap. This method of studying price movement can take some time to learn all of the intricacies of, but at the heart of it, we're looking for patterns that are moving from fire line to fire line. Now, before we move into a few charts, I want to let you know that the Voodoo Roadmap is part of the Voodoo Line study set and is a premium indicator. By no means is this time together today meant to be anything promotional, but I have to show you what I use, what I believe in, what I'm happy to put my name behind, and it starts here with this study set. So knowing that, we can start to look over into examples like Tesla. And this is a good recent example of what has been going on with this. One of the more important names in the broad market, and the Tesla Firelane Roadmap begins back around 108 and was my primary resource in thinking that price was getting ready to make a turn back higher. Once price does begin to turn back higher, this indicator is very helpful in prognosticating where price may go. There is a bit of voodoo involved with this work, and the path is not guaranteed. There will be many decisions along the way, but this is one of the most interesting things that I have ever found in trading, and it's my opinion that David and his Voodoo Line study set are one of the best kept secrets in trading. So let's look at another example of where this fire line provided not only an excellent downside target, but a good area of support, and ultimately ended up being a really critical reversal. Again, briefly recapping this with you, is the idea that when you are in free fall movement like this, there's a very high probability that you're moving down with an ultimate target of testing and completing down into this fire line. One of the things that makes this such a helpful way of looking for good entries, not only is it going to provide good downside targets, but it can often be the point that you reverse from. I'll often tell traders that, it's one thing to call a target and, have price move down into that target, but then it's another to have it completely, reverse generally quite cleanly from there. Not only are you not leaving money on the table if you're short, but you're, either getting ready to set up the buy or not being on the wrong side of it when it gets ready to begin that next leg higher. But the next one that I want to show you is here on the daily chart of the dollar. Now, I say the analysis is, on a daily chart, and this particular image is showing you a daily chart, but it's important to note that Voodoo Lines are time frame agnostic. That means that it really doesn't matter if you're looking at them on a 1-minute chart or on a weekly chart. The significance of this work comes in the varying degrees of importance for each level. So that's why we're focusing on fire lines. These are the most important part of this study set for today's conversation. So if you're new to them, we're just focusing on the most critical part of this way of deciphering technical charts. But again, further looking at the annotations on this, and those of you that have been in the Voodoo Mastery with David and I will remember that this story begins back in here, right? There's going to be plenty of times where these are treated more as zones and may not be to the penny, but they really need to catch your eye and bring into focus when they are perfect. This was also around some economic data, right? So on this day, you can see that the tree line becomes the target to the downside when price fails so perfectly at a tree line. It's kind of like that card game. I think it's called concentration, where essentially you flip one over and then you try to find the mate to it. There's a little piece of this, and it's an interesting day to be looking at the markets too, but I'm gonna focus on the short presentation here with you, at least to get that behind us. But a lot of good current stuff in this, but it's just showing you that concentration method is that we flipped over a tree line. We found a spot where the tree line has given us a perfect reversal. Look at the candle that comes after. You can see the importance of it, so that drastically increases the probability that we're going to go look for that other tree line. Now, as this starts to get further into the way of thinking, when we get to that target that's quoted as the downside move, notice that it does not provide any reversal. That's a very healthy candle that closes below it. The next day, even more bearish. So when it doesn't give you any kind of a reversal, it increases the probability of moving back down into the next major proportion. All right, that's essentially what David has done with this, is looking back at big major historical patterns and calculating their proportions with Elliott wave and Fibonacci principles to really make excellent prognostications on where price is going to go. So when this breaks and shows us no support all through this movement, we're thinking this is probably going to be that downside target. So fire line becomes a target when slicing through the tree line. And you can see here just in recent weeks how that was a huge theme for the markets. So dollar getting down into just above the centennial level and then the reversal up off of it. So again, part of my most important work is working with these voodoo lines. Those of you that have followed me know that this is nothing new, right? I mean, it's really, if anything, I just try to work more and more with David because this is, it's good stuff. But we move now over into the financial space where we're going to take a look at Goldman Sachs. Goldman is a spot where David found a trade for us earlier this week in the Voodoo Mastery. And at the heart of the spread that we used, you'll find a short call. Now, it's a short call that takes in a smaller credit, but it also has a very high probability of making at least $1, and that's done through the unbalanced butterfly. It's a great thing to be able to know how to do that as an options trader, and keeping that probability of profit favorable is probably something that a lot of options traders should spend more time considering. Right? In this example, we don't know for sure if Goldman Sachs is going to be a more bearish, right, roadmap yet, because remember, at the heart of this thinking, failure at a fire line could lead to a fire line, but there's going to be many decisions along the way, and rather than trying to think way out 6 months in time, we just use it for resistance this week. Again, it was a great spot to have those short calls against, and we can kind of have a pretty decent assumption that price is not going to get above them. So again, Voodoo Line's been one of my main things for a number of years now. I continue to work with them day in and day out, and I would encourage you to check them out if you haven't. Moving into the next little piece, and next in this list, we've got gamma levels. So gamma is an options Greek, and it's one that has come more into focus in recent years, right? The advent of weekly options, which has been a while now, but all the same. And then even further, the advent of the 0 days till expiration options has really started to bring this gamma-focused analysis into play. And it's another one of the most important things that is driving today's market. So, here I have the screenshot of the homepage of SpotGamma. These are the guys that I get this work from, and I have shared an affiliate link there at the top of the page I've actually never shared this link until today, though I've had it and I have used their work for more than a year, but I've had a lot of traders asking me about it. And, they're a group of traders that I'd really love to work with more. Brent is their primary content provider there, and you can find a lot of their content on YouTube as well, if you'd like to kind of just get, a glimpse of what's going on there. But as far as, just flow, a lot of this short-term derivative action that's so important, it's the resource that I have been using. So further into that, and for some of their work, I wanted to start with an excerpt from today's morning analysis. So there's a couple of things in this note, and the primary pieces I have highlighted, but what it starts with are the ideas that support is down into 40.60, and then more importantly, the put wall at 40.50 would be a critical level. So an SPY that's going to be 405, an SPX that's going to be 40.50. And then the further part of this note is just that, we give edge to the markets closing above 40.50 today, partially being influenced by that, what they refer to there as the put wall. So what is a put wall? Well, it is the strike with the largest negative net gamma in the underlying stock or ETF. It can act as support, acting where buyers may enter the market, and it also lets you know when momentum is shifting or as traders roll big lumps of options that can influence price action. Again, it can help you manage a position while you're in either long or short, as the shift higher is often bullish, while a shift lower is often a bearish sign. And it's just one way that the options are kind of almost slushing around, right, from heavy volume spots and then either being rolled lower to kind of keep forcing that price lower, or being pushed up into the, into the bullish side. It really can happen both ways, and they're updating these levels each day, which, again, they will change, but it helps you get a feel for when a product may be able to continue going, what its most magnetic levels are. And it's just a really, again, a big part of what I'm doing in my day-to-day analysis. So again, the last part of this note is that giving edge to that above 40.50, and that being the put wall. So I come into my analysis today knowing that should be important as I put this plan together. So look how SPX is traded today, right? You get a large break below the fire line to start the session. Yesterday, just really, cascading selling off of the Fed commentary. But I really want to focus on just the technical aspect that shows us that when we gap below that fire line, that's pretty bearish. And that's usually a pattern that's going to see a continued flush. But 40.50 ends up being the strike as far as where to focus on for morning support. And, I'm not going to hold them to whether or not the markets do, in fact, close above that strike or not. I think it'll be great in this presentation for posterity's sake, if it does work out, right? But really part of what I was bringing into the Voodoo room this morning, because I bring you everything, right? It's the Voodoo work. It's the everything that I know to think about for structuring your day. You'll notice how the moguls kind of went through them, right? I had a mogul at 43 and at 58, but where did the bid come from? It came exactly from 40.50. So the trade that we were discussing in the options room, or again in the Voodoo Mastery this morning, was just a couple different ways of selling the 40.50 put, right? These strategies are, and it builds on, again, if you follow Simpler and you're in any of the rooms, you know that a lot of the day trading and the quick hits mentality, or Cody's stuff with the 0 day till expiration, zero drama trades, they're all working to do basically the same thing. At the heart of it, it's the same thing of selling SPX premium. And I think it's one of the best things you can be learning right now, because it's one of the hottest games in town. I say that kind of always like when you would play cards, it's like, oh, where's the best game? And in trading, these games will change. For a while, maybe it's meme stocks or what have you, but with this 0-day focus, it's really something you want to work to get your head around. And that's again where we started today, is just saying, all right, I know this gamma strike is the most critical, so that's what I'm going to be focusing on selling. And then as these spreads surged, we discussed and looked at that sale of the 50 for about, it got up above $4. And then when it contracts to take in about 50% of the premium, that's your trade. And then the other part of this, it's basically the same thing, but especially on a monthly expiration, I believe it's worth looking at both. And that's to say, what does SPY do at 405? That's another incredibly liquid options market. So knowing these very important strikes coming into the day, look at SPY now, 405.35, right? And just alternating a touch here between the presentation and a live market. But we knew this coming into today as being a key strike because you can see it in the overnight. And then as you look at it today, again, maybe not wanting to force too much, whether it does perfectly close above it or not, but you just know that for the most part, that's a put that should be sold rather than be bought. And on expiration, there's usually going to be a vested interest, and those options having more of a decay feeling to them. So that's a big part of, again, what I started my day with, what I've been using every day in this. And then there's just a couple more things that as we think about these key levels, because of course, not every time will a level be perfect, and it's nice to have a little bit of further confirmation in the idea. So now I want to look at some triggers, in this case, that are against either the high of the low bar or the low of the high bar. This way of thinking about movement is especially helpful as we work to divide daily price movement into two ways of thinking. The first of which is momentum, which sometimes can also be called one-time framing. And basically, the market is moving in one direction. While this is happening, you will not see these high of the low bar triggers. And then when you do start to see them, well, you know that that part of the move is potentially coming to an end and may be ready to work the reversion to the mean, the movement back into the 21 EMA. So that is just to say that when you see, and there were, there's one in here that was a little bit of a failed signal, right? Because you get that close above the high of the low bar, but then you come back down to get below it. But then just about a week later, you can see that it comes up again. And then what you're wanting to see, from that moment forward, and I'm going to, show you this with a little bit of detail, but you're taking that bar and the bar that comes after it as its 2-day combo and saying that shift is what I'm wanting to use as my buy. And then from there, you set your stop below that low. This is where you try to look for the one-time framing to kick in, which is to say that pattern makes a higher high and a higher low. Then the next day stays inside that range. Then the next day, do you see how you make a higher high and a higher low? Well, then you move that stop up, and then you just stay right within that way of thinking, and essentially it never reverses until you get all the way up into the fire line, right? So, it's obvious, I'll admit to you, that was, in a perfect world, you get one of those triggers and it just reverses, but those close of the high, in this case, above the high of the low bar, starts to show you the importance of support. That completes the roadmap up into here. And now you're seeing those sell signals that let you know this one time framing action, this basically straight up, is very likely over. So that's tying that signal into the Voodoo roadmaps. And then finally, kind of briefly, the ATR trailing method, which this is going to be the shortest time frame work. And for me is again something that I've adopted, worked more with in the past 18 months, 2 years. I wouldn't say that there is a definitive start date for this, but it was the recognition that the, swing-based buy and hold market and trade weekly squeezes was really not the place to be. And you kind of had to be more willing to day trade. So the way that I did that for myself was just to layer up this ATR Trailing Stop. Again, I do like at least showing this part of it to you. I've got a workspace that I'll try to get included with the links, but it's going to be built into most platforms. So it's an open and easily available, type of indicator. It's not going to cost you anything to put on your charts. And then I can show you how it helped with today's entry, right? And today, again, totally sloppy off of the 2 minute. You can see it's a sell and it's a buy and it's a sell. So this alone is not good enough to be a trading system. You need to come into the day saying, like we've already discussed, okay, 40.50 is my key gamma strike. But what if that's not going to hold? There's a big gap from 40.50 down into 4,000. But we tag 40.50, we see the shift of the ATR trailing stop, and then that's the movement. That gives you plenty of opportunity to take those 0-day spreads and at least scalp 30% out of them. Then depending on what the day turns into, maybe a little bit more. But those are the primary things that I wanted to share with you guys that I'm using in the current market environment to spot my best entries. We could go a little bit further just because today was kind of an interesting day to cover these various aspects of technical analysis. But you can see you get the bounce off of that gamma strike. And then what I wanted to, because you keep a couple different ways of thinking, a couple tools in the toolbox, so to speak. But then you look at the retracement of the overnight action, right? So you just take the overnight high against the overnight low, and that's failure right at the 618 retracement. So bounces off those levels that the options revolve around, take you right into that retracement, and the cash market ends up being right at the opening high of the day. So to me, these are more very basic things. Everybody's looking at the high and low of the session, but using that method of getting you involved, scalping it out when you can, I think that's been like I said, the best thing that I know to give you for a current focus. And we'll conclude today's presentation. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.